Very good. Let me go ahead and call the City of Alpine workshop scheduled for 4 p.m. to order. Our rules are simple. We have no rules in terms of dialogue discussion, and if anyone's going to be on the web today, they'll be able to ask questions as well. I would ask that if anyone does in fact sign in, please wait your turn and we'll call on you. And our subject tonight is employment insurance discussion presented by Hotchkiss Insurance. And Megan, I'll turn it over to you.
So one of the things that council had talked about is our current insurance policies and then our HRA and options. I know some of the feedback during our compensation study, our employees wanted more. I reached out to Riley and his new assistant Desiree, or vice versa, I'm not quite sure how it works. Desiree's new to the team, to kind of have them put together a presentation, just something to walk through where we are comparable to others in our area. I do believe that the city does offer probably one of the best within our area, considering, you know, we can't really compete with federal and state insurance practices. So I did pull some information for him to look at, including the Alpine ISD. Just so that council understands, currently the city provides 100% premium coverage per employee for insurance, dental, and vision. We cover 50% of the insurance for dependents and 60% for family coverage. So that is a huge undertaking, and I have not seen it with any other entity in our area. And then I'll let them kind of jump in and go through options, what he's found, thought processes. We've kind of gone back and forth with discussion, but this is Riley Deering. He's here to
You guys
present.
want me to stand at the podium?
Yeah.
Or-
Probably, yeah, because we'll need a mic so that
Okay.
people, if they sign in.
Perfect, perfect,
Yeah.
okay.
Can I ask a question first, Megan, to make sure I understand? I get 100% for employees, okay? I understand 50% for dependents, but you threw a curveball in with 60% for family. What does that mean?
That means that the city pays 60% of family dependent coverage. We pay 50% for spouse and 50% for children.
I thought you said, so it's 50, so it's not, I misunderstood, it's not 60%, it's 150.
If they have dependent coverage. So we cover all of our employees.
Oh,
And then
okay.
if they decide to put their family, their children, or their spouse, we cover an additional expense as well.
Okay, but they have to sign up for that.
Yes,
Okay, got it.
that's not just given to them. They actually have to sign up and cover the.
Okay, very good. Okay, it makes sense. Got it. Okay.
Okay, my name is Riley Deering. I am the West Texas Region Leader for Hotchkiss Insurance. I have been the consultant for the City of Alpine's health plan for about 5 years now. This is Desiree. She's the account executive that is assigned to the City of Alpine's health plan. So she works alongside Megan and the team. And so Megan asked us to kind of do let's backtrack a few years and then where are we today and what are some things out there that maybe we can look at. So backtracking to 2020, from October 1 is the renewal for the health plan. October 1 of 2020 to October 1 of 2022, we had a 2-year rate guarantee. So there was no increase at the 21 renewal. We negotiated a 2-year rate guarantee. This is with Blue Cross, is who the carrier was at that time. They still are the carrier today, actually. In 2022, there was a 5% increase. Across the state, nation, averages are probably anywhere from 9 to 12%. There's some of them out there that are renewing at 30 or 40%. 5% is probably about as good as you're going to get in a fully insured environment. So there was a 5% in 23, another 5% in 24, which is this last October. And then we're unsure of what it's going to look like in 25. So, very favorable. I would say that you could go back and ask a lot of companies, you could ask a lot of health plans, and they wouldn't give you that same story on what their increases have been for their benefits package since 2020. If it's anything like that, it's going to be probably more of a partially self-funded plan and their expenses have probably just been a little bit lower, but for a fully insured plan, that's extremely good.
Right, I'm gonna interrupt.
Yeah.
Cause Darren, even though, I mean, he's new, but he's on his way out at the same time. The city used to be partially self-funded, which means we had someone administer the administrative side of the health insurance, but we actually covered the claims up to 35,000 before stop loss hit.
Yeah.
In 2020 is when we went fully funded, which means we weren't covering claims anymore. We were just 100% premium being paid to,
Still funded up to 2020 on, fully funded.
yes.
That's correct, yeah. So, I will be the first to say I'm a big proponent of being partially self-funded if it makes sense. And at that time, there were some claims on there that were an exposure to the city.
Yeah.
And some things that, the best thing that we could do is in that moment, take that 2-year rate guarantee that we had negotiated. Because it gave the city the ability to project out for 24 months what their cost was gonna be on that. And then it ran well enough and we did a good enough job negotiating that since then it's been very favorable. So I do not know exactly what to expect October 1 of this year. We're still far enough out that anything can really happen in the claims data, but as we sit right now, it's running rather well.
Yeah, because the good news is you get, when you're fully funded, as you said, you're kind of guaranteed, you know what it is. Partially funded, you get a better rate on it. However, your exposure is there. And if you get a couple claims in a small population, you get.
You do have a max exposure on per belly button on the plan, which is the spec, and you have a max exposure on the aggregate, which is all the claims under the spec. You do have a max exposure where at any of those 2 points, you stop paying as a plan. But when the fully insured rate is, 30% less than that max exposure, it doesn't really make sense.
Yeah.
Now, if you get up to where it's like 10 or 15%,
Yeah.
more risk you take on, a lot of times you'll end up winning.
Yeah.
But when that exposure is, where it has been the last few years, it doesn't really make sense for the city to do something like that.
Yep.
So that's kind of a look back. Everything's ran very well since that time. As I said, it's looking, favorable for the October 1 this year, but we're not really going to know until we can pull claims data and look at everything at about 90 to 120 days out. We're not going to get any carrier to lock in rates, at this point, with it being the middle of April. But looking favorable again for this renewal. So the one public sector plan that I was given was as she had said, Alpine ISD. So just a comparison, like what's in the market. So their lowest cost plan is $95 employee only. Y'all's obviously is free. And then they do not, from what I can tell, pay any percentage of the employee spouse, child, or family if they had any dependents, and you guys are paying 50% of that. I think to add a family, it's $450 a month or something on the city's plan, and it's $1,500 on most other plans out there. On top of that plan is a $2,500 deductible plan with a $5,000 max out of pocket. When you're comparing that $95, when the city's is $1,000 deductible with a $3,000 max out of pocket. So it's free and the deductibles are significantly less. I would also say the $500 that is in the HRA account that you guys contribute. If you have $1,000 deductible, but you have an HRA card that's paying $500, in the end, it's really a net $500 deductible, $2,500 max out of pocket on a plan that's extremely affordable when you compare it to others in the market around here, whether that's oil field companies or more public sector companies. It's a really, really rich plan in comparison to all those. So it is also, that plan with the school is an HMO plan, where the city's is a PPO plan. So you're talking about an HMO plan that is, there's no out of network benefits. You have to go to certain doctors and you have to have a primary care physician. And on the city side, it's a PPO plan where it's a broad network. Do not have to have a primary care physician selected. So there's a lot of benefits, but then it's also a lot less expensive for the city employees.
Who's the HMO provider for the school district?
They are actually on the teachers, help me out. They're on the teachers
Not the-
health plan. And I think that it's Blue Cross is their
I
network.
think Blue Cross.
I
I
think
work
it
at
Blue-
Blue.
Yeah, I think Blue Cross is the network there.
It's like when we had that 1 or 2 years where we were on TML's healthcare.
Yep.
And I think it was United and something else. They have the same type of coverage where they go through the education side to get a.
Don't hold me to it, but I think it's TRS is the name of
Okay,
it, I
yeah,
believe.
yeah, I think, okay.
Yeah,
thanks.
and I believe that the last time TRS negotiated that Blue Cross became the PPO.
But I think we might have gone to Aetna or something briefly, and then they went back over to Blue Cross Blue Shield.
Okay,
So that would be who would be the HMO provider,
Yep.
PPO network,
Yep.
the network.
the network, yep, okay, thanks.
So that's a comparison to one that we were given in the area that you can compare to in the public sector. Very good health plan for the city. And paying for a good majority of the premiums for the employees and their families.
And Megan, to that point, from back to our cost comparison, is it driving our applicant pool because of the benefits we have?
I can't say yes to that. I don't think we probably do the best job advertising our benefits.
Okay.
And I guess for me, when I got the results back, and one of the things was is they wanted more on the insurance, to me, it kind of like, wow, because we already provide so much compared to other entities.
Yeah.
I know the county doesn't offer coverage for the dependents. We have a low deductible and we pay 100%. I think if we've been talking about it more on the HR side, is how do we twist it or turn it around where we want you to work for us and these are the benefits. We always try to encourage when we do our hiring events is, hey, this is everything you're gonna get. It's not just that hourly rate, but this is everything else in addition to it. So the older crowd looks into it, but not the younger crowd.
I just would say that you're gonna be hard pressed to find a benefit that's better than that.
Yeah.
I mean,
Yeah.
we work with plans all over the state in public sector, private sector.
Yeah.
And there's gonna be others that are as rich as that, but that is about as rich as you can get. I mean, the premiums are free.
Yeah.
And then on the family and child and spouse, they're paid 50% and the deductible is virtually $500, employee only, almost unheard of. So it's about as rich as you can get.
I guess, Megan, you said our cost per employee for benefits runs about 9,000
Roughly.
for each employee. What is it in? What's within that 9,000? Is it basically all health insurance?
So it's gonna be all of your health insurance, not the dependent part, but just what the city, just the employee portion. So we look at your health insurance, or your dental, your vision, we look at retirement, we look at life insurance, we look at the paid holidays, vacation, sick leave.
What percent of that you think is the health insurance side? Of
It's the
9,000?
largest because just the employee side runs a little over 8,000,
So we're about 8,000 per employee for the plan.
a little over it.
On
I
a,
think it's
on a
like-
yearly basis,
Yes.
just want to confirm, yeah, I think I would have to go back and look at exactly what that premium is, but it's somewhere in the $600 range
Gotcha.
per employee per month.
It's
on the
close
employee
to
only.
700.
Yeah, it's between 6 and 7.
So it's basically $4 an hour.
Hmm.
That's just simple, 2,000 through, so 2,000 hours a year.
600 to 700 per month.
So
So about
When you do-
8,400 max.
when you look at a starting employee, and it also depends on their hourly rate. We look at the health and federal state mandate benefits, what we're required to provide, and then the paid leave benefits, and then, ideally, we would adjust accordingly. So the insurance, the last time I checked an employee was $703.55 a month, which came out to $8,442.60.
Is that health and dental and vision or just the health?
So the health is 737 cents per employee owned cost.
So this is the last time
Yeah, it's mine's loading too.
This isn't on my laptop, this is just on my phone. So FICA, retirement, workman's comp, unemployment, and then the insurance contribution. So
And with that 8,400 that they're not paying, the city's actually paying that cost. then they have the $1,000 deductible, the 500 HRA.
Plus you're providing the $500 on the HRA that if they need to go to the doctor, there is a whole plethora of things that they can actually use those dollars on. But they can use those to meet $500 of their deductible. Which is significant.
HRA, explain an HRA to me compared to an HSA.
So HRA is a use it or lose it. So they have the ability to use that, but if they don't go to the doctor or they don't have that, the need to spend the dollars that are on that qualified expenditure, then the city doesn't have to, the city doesn't spend those dollars. On an HSA, if you were to say, here's $500 for all the employees to use, they have that money and it goes in their HSA account and they have it forever.
Gotcha.
And it's in their account. And so,
So if they leave, goes with.
yeah,
That's
So-
an HSA person.
And that would deplete what we have basically set aside in insurance. So
I
we
would
were
s-
self-funded. We had, once everything kind of ended and we processed what we could at the end of the self-funded part, we're left with money. And that's what's been funding the HRA, and that's what's been funding the Cobra.
so you could say for every employee on the plan, your exposure is $500 per. But unless they have something that they need that's on the qualified list of what they can spend it on, then you don't use that as a city. But if it's HSA, it goes in their account and then that never comes back to the city.
Yeah. The school district, I'm an HSA guy, and so I've been dumping money into an HSA because it can be an investment account for
Yeah.
later and everything else, which I love. But I can see how the city is a HRA, it's a offer to the employee, but we hope they never use it.
Well, it's a benefit in the instance that they have a need to use it,
Gotcha.
which at the time we felt like was a win for the employees and it was a win for the city.
When Megan, when you actually asked them for insurance, what was the sample size of like the people that responded back saying they want more insurance out of
I-
like 90-something employees?
That wasn't one of the information. It
Gotcha.
was, I think it's just part of the conversation. So when Evergreen was here for the couple conversations they had, they asked specifically the employees.
Gotcha. I mean, that's sample selection right there. If you use your insurance, you want more of it.
Yeah.
Of course.
And a PPO, can that be used anywhere, or is there any limit to where a PPO could not be used in the area?
With the Blue Cross PPO network, you may find a doctor or a doctor's office that maybe isn't in the network. But for the majority, when it's a PPO network, you're not gonna have a hard time finding a doctor or facility that's not in the Blue Cross network. PPO network. Now, if it's HMO, that's narrow network, but the PPO is a broad network. So, and that's what the city has is a PPO network. So I have not heard anybody, Megan may be able to correct me here, but I have not heard any noise about having trouble accessing doctors on the medical side. Yeah,
Does Hotchkiss offer HMO plans?
well, Blue Cross would be the ones offering it. If the city would like to evaluate adding an HMO plan to the offerings, go instead of a single plan, maybe dual plan, 2 plans, 3 plans for the employees to select, we can certainly do that. Yeah.
The only reason I ask is coming from the school side is we are an HMO, and I've never had issues out here because Blue Cross actually must offer something in the area.
Yeah.
So that flexibility may not be relevant in our area.
I mean, it's
already
certainly something that we could look at, hey, we want to keep the PPO plan we've got, but we also want to offer 1,000, 3,000 HMO. And those rates may be less, and the city can say, hey, we're gonna pay 100% of these, but if you want to buy up and have the broad PPO, then they can buy up to that. I mean, that's something we can certainly evaluate, talk about.
One thing that I know, and Ken hasn't been with the insurance side for a long time, one thing that has been discussed, and I'd have to really look into it more, is if you're gonna offer 2 different plans with 2 different rates, you have to balance it out. So if we're gonna offer a cheaper plan, we're gonna cover 100%, then we would cover 100% of the same equal amount. I
And if
think
you're
that's
covering
why-
100% of 2 plans, they might as well just get on the PPO plan. You know,
So the PPO, if it's 600 a month and the HMO is 500, the employee would have to pay the 100. Because we would cover 500 for each side and the employee would have to cover the difference. I think that's why the school district has where you have to pay that 95 or 200 or the different levels.
You're buying up to get the better plan, the plan that's got the lower deductible or the broader network or whatever. That's what's probably most likely happening in the school's plan. But there's only one plan. The city only has one plan, really rich, and it's free to the employees. So it's always been this, well, if we add a plan, then how do you award those that go to the lower cost plan versus those that want to, it's how do you do that if it's all going to be free?
Because everyone's.
Why
gonna
would you
choose
just
the-
have a rich plan,
Mhm.
Now, the only thing you can do is if you want to save the city money is raise that deductible, which is virtually cost shifting. You're cost shifting the deductible risk over to the employees so that Blue Cross will give you a lower premium that you're paying 100% of. But then it's your cost shifting to the employees
Yeah.
through deductible risk.
Yeah, that's why I asked the question earlier, when I think about benefits versus salaries or wages, do you say potentially a cost shift? And since it's worth $4 an hour, you throw $2 an hour over, if you get $2 off of the plan, they take the risk, they get a higher wage. Will that attract more employees?
Or a different kind of employee.
Yeah, exactly, particularly the yellow,
Yeah.
because that's the issue. You got a family, you don't have the benefits, you don't have a family, you don't have the money.
Mhm.
You know, my healthcare bill is only was 2.4 billion a year.
Yeah.
175,000 employees, 650 dependents, 1,000 dependents, so that's the games we always played. I
Yeah.
know what that- And we were with Blues.
Yeah.
Do you work with a lot of municipalities, and if so, do you see them staying on rich plans like this, or are they moving over to more flexible things like HSAs or cost shifting that over to the employees?
I would say that the answer is yes, municipalities, school districts, yes, we work with those. And I personally work with municipalities and school districts. The goal is always what your guys' goal is. Can we keep the benefits rich? Because we are competing with, out here, we're competing with oil field. And, and that's a private sector that's hard to compete with because they have good benefits. So the goal of all of those conversations are this exact conversation that we're having, and they do not want to cost shift to the employees. But they do want to get creative, such as an HRA, like that you guys have. Like, what can we do to provide more of a benefit that if they don't use it, it's not an expense to the city, but if they need to use it, we want them to use it. It's there to use.
And if we were to switch to the HSA, because I could understand long-term, people want to take it with them. We would have to put in some type of a tiered effect because then we would just approve the little safety we have.
So you can have an HSA alongside an HRA. Okay, we knew that was something that you guys were potentially wanting to discuss. So we went to our attorneys and asked them to please give us commentary and white paper on the subject. Yes, you can have it alongside each other, but how the HRA is structured in the plan document is key. And then how those dollars are handled are key, which is something that we will certainly go through with Megan and her team, if that is something you guys want to explore. But in order to have an HSA plan, you have to have a high deductible plan you have to have a high deductible plan that they play 100% up to that deductible. And you do not have that plan in place today. So now we're back to what do we do? Do we offer this plan that's 350 or 400 or 500 a month? And this one over here, but then they've got to buy up or we're not doing anything. It's just how do we work through that? So
Is the coming from this, is the negotiation basically, Megan, are you informing us this? Because what would be the next steps on something like working with Hotchkiss? Is it another 2-year contract? Or
So they're considered our insurance broker right now. I have asked that we go out for an RFP for insurance to get new quotes on the different ones. Usually they go to the different carriers that they work the closest with. We're gonna go out, see what people come back with. Obviously, I'm expecting 10 to 15% increase because new people aren't gonna really know who we are. And they'll have.
that's our job.
Yeah.
Our job is to put the bid together. To work alongside Megan and her team to put the bid together, get the packet sent out, give them the timeline, we'll give them the claims data. We'll give them everything that they need. What United, Cigna, Aetna, we'll post it on the public's website, and then if you want an opportunity, and including Blue Cross, they've got to be a part of the bid as well. Just because they're the incumbent does not mean that they are who is selected after the fact. Bring that back in a sealed bid, which would be delivered here to the city. And then you guys would open it up, see the rates, and decide what you want to do based on what you see. That is something that we are doing. That is going to happen for October 1 of this year.
So you ask council to provide the direction of what we want for the employees, and then once y'all have that direction, you go off and work with the insurers to provide those options.
Yeah. Well, we would give them the benefits as they are, the current benefit structures as it is today. And then they would give us a marketing booklet that says, okay, the plan you have today is X premium, but here's these other 75 plan options. And within that is going to be a high deductible health plan that is HSA eligible that you guys can evaluate to potentially add to the plan you have today or change up the plans altogether. It's kind of all up to you guys. But our job is to help Megan and her team get that bid sent out and timelines set up in the appropriate steps, which we are going to do.
And my recommendation is to keep our plan similar to what it is. I know when we made all these switches, it was preventative. It was a little bit more expensive to go to the emergency room because we didn't want you there. We wanted you at the doctor's office to take the preventative measures. It does have the lower deductible because we all know what we pay our employees, so we wanted to make that a benefit for them. I know between the HRA and the HSA, I'd rather give the employees the opportunity to have the extra benefit than take from their paychecks. I think some people would take advantage of an HSA because they're thinking long-term, but most of our population is our employee population is in that stage where it's like, okay, I don't want more taken on my paycheck. I want you to put more into it. And we've talked about all of these different options.
You can, Megan, put an HSA that is they can get on the high deductible health plan and not contribute to the HSA account. They have that option. But typically those that do that are on a health plan where we're going to pay 100% of that high deductible health plan that's got a $5,000 deductible. And then if you want the $1,000 PPO plan, you've got to pay up to that. So then you get a lot of the younger population that says, I want the free in case something significant were to happen to me. At least I know that I've got a $5,000 hospital bill instead of I've got insurance. And then some of the other population may purchase up to that PPO that's got a low deductible. But we're right back to where we're to this, like, what are you going to do? Because if they're both free, what do? I mean, maybe they're both free and you can get on this one over here. It's high deductible because it has to be. And you can contribute to an HSA if you would like, or you can get the free lower deductible PPO. That's maybe an option. They're both free, but here's one's the ability to contribute to an HSA account if you would like.
Yeah, and I get what you're saying where they're both free, but the cost is to the employee. You said $350 on if it was a high deductible HSA or whatever plan. You said $350 per month. Right now they're paying about $700 per month. So the city is paying that extra amount right there, which when I do the math, it's about $4,200 per year. But does that move the needle for somebody, at the lower end? If they're making $30,000 or $34,000, does that move the needle? Would they rather have $30,000 in full coverage or $34,000 in HSA coverage on that? And I guess my next question was retirement accounts. Do we have retirement accounts?
Yes.
We have
TCDRS or whatever that is? Or
So it's
separate?
TMRS. So it's under the same umbrella as ERS. It's the Texas Municipal Retirement System. It is regulated by the state. And it's 5%. Every employee contributes 5%. And then the city's portion kind of fluctuates, but it's a 2-to-1.
And they have to get vested.
Yes, it's a 5-year investment.
And is there any like 457B or anything else like that? So there's no private way to invest. So they have to get vested through, stick around the city for a while. Okay. Only reason I asked
The
that.
350 I threw out there, I was just giving an example of.
Yeah, because I don't think that they're.
Because I have no idea, it's not going to be 350. I would highly doubt that, but
Got
you
it.
may see $100 difference in those two, depending on, do you do a 4,000 or a 6,000? Like there's a lot of variances in there. So I have absolutely no idea what that premium would be. I was just giving an example of the two and how you would present that to the employees. But if they're both free, I would say that they're all probably going to go to that plan that they're on today. Unless they say, no, I want to go to this one, have a higher deductible, but I want to contribute out of my paycheck to an HSA. Maybe you have a few that want to do that.
Well, and I think that's the problem is a lot of people, their eyes are gonna glaze over when you mention HSA to them and they're not gonna think about it.
Yeah.
To say, so the fact that, I mean, we have the HRA in place, we have one of, I like his term, you know, we're benefit rich with our insurance and what we provide. I know that we talk about everyone wants options, but I think in this case, we've done such a good job as a city. We don't need to put extra options in.
And is this only for dental, vision and medical?
Medical, dental, and vision is, I mean, the conversation today, yes.
Okay.
Yeah.
So for the dental and vision side, the city does not cover any of the dependent on those. Those plans are also much smaller. For example, I believe our vision is for something less than $5 a month per employee. And then if it's employee and children, it's like less than $10. So there's not the significant impact. Same with our dental. It's around $35 a month per employee.
Do we have data on how much the plans get used? Like I say, if we have 100 employees, 20%, 40%, 60%?
So I don't have, because it's fully funded, I don't have access to the claims. At any given point, the only information I have on our insurance is when something goes wrong and they complain. No one ever comes in and says, yeah, I used it and it went perfect.
Yeah, so we can probably get Blue Cross to provide that data. Keep in mind, it's fully insured, so that you are limited to the, you know, the depth of the information you can get. But if there's specific things that you want to know, we can certainly get that.
Yeah, I think to your point, it'd really be helpful to have that, so we get some sense about utilization and going back to this competitive market space. You said, because it's $4 an hour. I mean, that's what it costs. That's what we're, so if someone's making $15 an hour, if they had no coverage, they'd be up to, $19 an hour. Well, go back to your point, it's not gonna be $3.50 difference. It's probably gonna be $100 difference. Now you're talking about $1 or $2. That's not gonna be enough to move the needle in terms of those who want to come work for us. So back to fully funded plan is what people tend to want to go with.
And a few years ago, I did reach out to Riley, because I understand that our younger population is invincible. They're all heroes and they don't need insurance.
Yeah, of course.
And I asked him about, what it would take, because I know that there's the option of, instead of providing them the insurance, we would just give them the money.
Yep.
Yeah, no, it doesn't quite work that way. It's not you.
That
give them
could
the
be looked at
premium,
as if
you
you're-
give them the premium plus.
Yeah, that looks as if you're incentivizing them to not get on the insurance, which
Yep.
is not something that you can do.
Yeah, it was quite interesting. We're not a Fortune 500 company that can easily do this.
You're self-insured.
So-
Yeah.
So that was, like I said, we've been looking at different options along the way.
Back to the dental and vision real quick, because we were kind of on that topic, then we got off of it. The one thing that we have heard from employees is access to dentists and eye doctors. And so we did a little groundwork on that. And the one thing that we do need to evaluate for the October 1 renewal is maybe a carrier change there related to access to eye doctors and dentists. And I'm not going to throw carrier names out there because I want the process to be fair and just, because this is a public sector. But we do know of a carrier out there that we feel like may be a better option access wise. I do not know about rate wise, access wise.
So that's one of the hard things is several individuals have complained about dental vision as far as the claim, like they won't take the insurance. I don't think it's a matter of them not taking it as far as like the insurance. If you were to submit a claim yourself, you could get the reimbursement, but our employees don't typically want to go that route. I think it's more like a personal thing with our providers in Alpine where it's easier for them just to not go.
It's
through the
not just
claim.
Alpine. It is all across the migration of dentists and eye doctors just saying, I'm not taking the insurance.
Yep.
And then
But
find
you can
out-
take the claim and go file it with your insurance and get reimbursed up to 90th percentile usable and customary. Like those things are out there. It's not just Alpine, it's happening everywhere where eye doctors and dentists are just saying, we're not playing the insurance game. You pay us, and if you want insurance reimbursement, you can go do that. So
Well, because it's a cash flow issue and it's an overhead issue.
yeah, it's just a hassle that they gotta deal with, I think. So,
With an HRA, is there the same flexibility in spending as an HSA? Like I use my HSA for a chiropractor on occasion. Can an HRA be used for that?
yeah, so there is a list on the last time that I looked, which is a few years ago, the list was actually pretty much the same. The approved expenditures for an HSA and HRA, I would have to go look that bucket up again, but the answer to that's yes, they can use it for things beyond just medical.
And then you can use it for over-the-counter stuff as
Yeah,
well,
super
cough syrups,
Yep.
Band-Aids. So every year when we do our insurance, we
We
sit
provide
down
that list
and
of,
we provide everything to them.
Yeah.
The health, the dental, the vision, the rates, what's in network, out of network, the breakdown of, you know, your, premium, everything, and we provide them that list. A lot of individuals utilize it for the over-the-counters. Right, a lot of them use it for prescriptions too. From a budget standpoint, because I need to move forward, I know we won't have the rates locked in until we go out for new rates. I'm going to budget a 10% increase. That's kind of what we did last year before we got the numbers in. Just to have it as a placeholder. And then once we know more, if we need to make changes, we can.
What are those numbers? What number are we at right now and what's 10% over that?
So you said we were at 7 something, yes. Let me give you.
So we're looking at 770 per employee.
This is the-
she's gonna budget that, but that's what she's also budgeted the last 3 years, and we've come in half of that each time.
And Megan, do you know the gross of what we spent on that for the city?
No, not off the top of my head. Over 500,000.
Really?
So in the last 12 months, from March of 2024 to February of 2025, the total premium sent to Blue Cross was 737,000, but not all of that is city's dollars, because keep in mind, there's employee, spouse, child, and family rate that the employees pay 50% of.
So just 700 times 12 times 85 employees is $714,000.
So if we went 600, then we're looking at another 60,000 or something like that, 10% increase.
Benefits are expensive.
Uh-huh.
And
You
that's,
guys offer a really rich one too. I mean, so, you know.
and that's why I wanted Riley, because I know we keep talking about, you know, the employee benefit side of things. I wanted them to come and kind of have, you have the ability to ask the questions. I know that we have a rich plan, and I know some of our employees do take advantage of it. But I thought it would be good for council to have that understanding, like you guys provide a lot to the employees. And so I think it's just like we mentioned, just getting that out there more. Letting them know that these are all the benefits you're being provided. It's hard because they do see that the value of it, when they say, oh, well, we're providing you 9,000 in insurance, well, why can't you just give me that in cash? Why can't you just give me that in money?
What does the city have that they offer outside of an insurance provider? Like if there was a 457 or something like that, as far as a retirement plan, a private one. We don't do any of that.
No, we would actually have to go out and inquire and find a company, and council would have to approve that.
Gotcha. The only reason I ask that question is we offer great insurance for young people that may not need it, and no retirement plan to keep them around here long enough so that they stick around for the insurance. Outside of the one, you said we do a match on the TDRS or whatever that was.
TMRS.
TMRS. Was that a 2-for-1 match, or what does that look like? Just so I know.
It's a 2-for-1.
And what, up to what point? 1,000, 3,000? Is it like a 401k?
I think it has a match. It's just what you deposit is what we match. I have to look into it. It's been a minute.
What is the average age of our employee?
I want to say 40 something. I don't have that spreadsheet on this.
I can get it pretty quick.
Okay.
I'm not sure it's on one
He's
of
gonna
these.
have the average age for those who are insured.
Yeah,
Oh.
I'm gonna have the average age for the insured. I would not have the average age So that may be Megan, that may
Yeah.
be something you need to answer.
Do we have any employees that aren't insured
I was
though?
gonna say, yeah.
yes, part-time employees don't get,
Gotcha. Okay. How many part-time employees do we have? Dozen?
about.
Okay.
And then, of course, our seasonal employees.
Yeah, it's- yeah, of course, the lifeguards and all that stuff.
Average age on the health plan from March of 24 to February of 25 was 36.3.
Oh, good.
Let's see here. No, I'm sorry. That's the average age on the plan. The employee average age was 42. Spouse average age 47, dependent 12. 58% males, 41% females.
Does it show if they're single or married?
This does not show if they're single or married.
We don't. do
Just,
that.
we only know about them if they get on the health plan on this report.
Unfortunately, I can't open the file at the moment, but it has the city as a whole.
On the health plan is 42, so I bet it's gonna be pretty close to that.
Because we do have a couple older employees who are not on our health insurance. Actually, we probably have maybe 3 or 4 that actually decline our insurance.
Because they're on Medicare, I'm assuming.
No.
Or their spouse.
They're on
A
other
spouse is
plans
planning,
Yeah.
yeah.
that are, I guess, more beneficial to them. And
So if they decline the plan though, what's the benefit to them and or to us?
Well, we're not paying for their insurance, and they're obviously on another health insurance plan that's better than ours.
Okay, so they don't, but they don't get any benefit by declining if they're issued.
Yeah.
When when an employee retires, what does that offboarding look like from the city's insurance? Do they move into Medicare, Medicaid?
Our city does not provide any insurance benefits after they retire.
So when they retire, it's all on them. They go find private care.
They have to find private
Well,
care.
if they
have to
retire
be
after
FEH,
65, they can get on Medicare.
Or have
Yeah.
have to be FEH.
If they retire before that, they would go on Cobra.
Yep.
That they could then live out for the period of time that they're eligible for Cobra.
Which is what, 18 months?
Yes, there's some certain situations where it could be a little more than that, but yes.
One final question for you. Where do you see insurance costs going in the next 5 years? Dramatically up or?
It's crystal ball.
Um. Yes, I would say if you were to go out and ask any of the major carriers or stop loss carriers out there that are actually taking on this risk, they're all gonna tell you it's not gonna go down. It's not gonna level out. It's not gonna go down. So, yeah. If you're getting on a fully insured plan, if you're getting the 5% that you've been getting, I think you could set down 100 employers and ask them, all 100 of them, they would probably all say, if I can be guaranteed that, I'd take it today.
Average age is 41 point.
We will also in the RFP be asking for partially self-funded numbers. I think would be good to evaluate. I mean, it's just, all it does is add a little more work on us, but that's what we're here for, is to work on y'all's behalf, to provide you the data and information to make decisions. So
Does that mean, say they're paying, let's make it simple, 800, and if we were half self-funded, 400 of that goes into our fund, 400 of that goes into the insurance fund?
no, so it's all about, it's a different way of purchasing. It's a risk. It's a risk today. You're deferring that risk because if something really bad goes wrong, the insurance carrier just gives you a 15 or 20% increase and you pay for that in the future. So personally, I don't call it fully insured. I call it fully deferred, because if your health plan starts running bad, then you're going to pay it in the future. Whether you switch carriers or not, they're going to look at your data from the last 3 years and you're probably going to pay it. Self-funded gives you the ability to control some of those things as they come on, provide more cost containment strategies, pass through PDM models. There's a lot that you can do with a partially self-funded plan because you get you take on a little more risk, but you get flexibility. You get to design the plan, you get to pick the stop loss carrier, the pharmacy benefit manager, and make some decisions that you don't get to make in a fully insured environment. So, but when you do that, we talked about the max exposure per belly button, the spec, and the aggregate, all the claims under the spec. So let's say that try to use kind of real numbers. You've paid $747,000 in the last 12 months of fixed cost premium because everything you do today is fixed cost, right? So let's say that max exposure is then on a self-funded plan, 900,000. So we have to understand as a council and a health plan that our exposure is 900,000, but our fixed cost now may only be 250,000 because we hire an administrator, we pay a PBM, we pay stop loss. Our insurance cost is now only about 25% of our 750,000, but that gap from 250 to 900 is now what we have to pay claims. But when we hit that 900, we're done paying, or if we hit whatever the spec limit is on each belly button. So we set a budget and we fund to that, and maybe we fund to the max exposure we have on aggregate claims. Maybe we fund to expected if you guys are comfortable with that. But then you may win, but you may also spend the 900 when you could have only spent 750.
That's the flexibility.
But you get flexibility in where we're good is the flexibility in what you do to provide lower cost through the door. Meaning the cost of your health insurance is really two things. It's the cost through the door and how often are you going through it? How healthy is your population? And what's the contracted rates you've got at the facilities that they're walking into? Today you use Blue Cross to access that PPO, but can you use a broad PPO but layer on direct agreements or things that you guys can go do, that we can do on your behalf? So that's the flexibility you get in a self-funded plan. You guys are right there on the edge of like, do we have enough employees to spread that risk? And that's where it gets tricky because it really just takes one employee that gets really sick.
Yep.
And then it's hard to keep up with and budget for that.
And is that based off, like, say, I know a majority of healthcare costs are chronic illnesses. Are those the ones that eat it up from the insurance perspective?
Yes.
Or
I mean, it could be that, or it could be a preemie baby. It could be the landmines out there. You guys were partially self-funded 5 years ago. The landmines you have today as a self-funded plan under 100 employees, because that's not a significant size employer. It takes $2 million premium baby or a RX drug that's $600,000 a year. Those things are out there all over the place. You guys have not experienced any of that in the last 5 years, which is a positive thing. But if you're partially self-funded and something like that happens, you do have the flexibility to go find a resource to get that at a lower cost than you do fully insured. But you also have that risk. So I have employers not in the public sector, in the private sector, under 100 that are partially self-funded, and it's very successful. But that's a conversation I can go sit down with the CFO and the CEO and say, okay, here it is. And they'll say, okay, well, I'm going to take the risk on and here we're going to go. That's a little different than this room when you're $750,000 of fixed cost with Blue Cross fully insured today. Do we take on 900K or 875,000 of risk?
Council's decision, but not my recommendation.
Yeah.
I came in as when they were partially self-funded, and I can tell you right now, they did not manage or plan correctly, and it was a nightmare. And
We could fix that. We
do have
could
those-
set it up where it would be managed appropriately, but the decision to do what we did was based on the 2-year rate guarantee that we got. Because it helped us project out for 24 months what it was going to cost the city. And the exposure was 30% or more less than that because there was risk on the plan that made it where like this just doesn't make sense not to do this.
And knowing some of our employees, I feel like that risk is still probably there.
Any other questions?
No, this is good.
Yep.
Always good to get an update.
Yes, thank you very much. We appreciate it.
Thanks.
You're welcome.
Got a question, where are y'all based out of?
She's out of Midland
Okay.
and I'm out of Lubbock.
Okay.
Okay.